Good morning, everyone, and welcome to the webinar on the IHI on the topic managing the financial aspect of proposal for single stage calls. My name is Nassima, and I will be your moderator today. Before we start, I would like to give you some information. So as you know, we are recording this webinar and it will be published on the IHI website and the B2Match platform as well. We will also publish the slides that my colleagues will present to you today. The call will be officially launched next week, and all the links and details on how to apply will be published on the IHI website and the funding and tenders portal. So today I have with me in the room Gaëlle, who is the financial officer, and she's going to do the presentation. And we also have my colleague Domenico, who is the legal officer, who will also reply to your question if you have any. About the question, I'm encouraging you to send them via the chat panel, and we will address them at the end of the presentation. So now I will hand over to Gaëlle to start the presentation.
Thank you, Nassima. So good morning, everyone, and welcome to this webinar on the financial aspect of a proposal for call 7, which is a single stage call. So today, during this webinar, I will go through the different elements that are composing a budget and a budget table, sorry. I'll explain also the different types of contributions that can be brought by private members and contributing partners, namely ICOP financial contribution and IKAA. I'll explain the different key thresholds that are important for the proposal's budget and the steps that you need to follow for building a proposal budget with a concrete example. And as Nassima said, after this presentation, we will still have some time to address your questions in the chat. So, first of all, let's start with an overview of the budget for call 7. So as you can see on this slide, there is a breakdown by topic. The maximum EU contribution foreseen for topic 1 is 25 million. The same for topic 2, and for topic 3, it's 45 million. So this gives a total envelope of EU funding for call 7 of 105 million, and the equivalent amount is expected to be provided in terms of in-kind and cash from the industry. So as you can see, there is a 50-50 matching between public funds and private funds, which is an estimated target for call 7, since 50% matching needs to be reached at overall program level. Here it's a breakdown by a proposal. So the estimated EU contribution per proposal for topic 1 is approximately 12.5 million. The same for topic 2, and for topic 3, the estimated EU contribution per proposal is 15 million. Note that those amounts are estimations only, so you may submit a proposal for more or for less than those amounts that are indicative. The equivalent amounts are expected to be provided from industry, and here the 50% is like a prudent approach, as the 45% is actually the formal minimum accepted for a proposal. And if you sum the total estimated funding from public side with the total estimated private funding for each proposal, it will then give you the total estimated cost per proposal, which is 25 million for a topic 1, the same for a proposal of topic 2, and 30 million eligible cost per proposal for topic 3. So concerning the total eligible cost of a proposal, they can be incurred by different entities. First of all, by entities that are requesting funding only, like SMEs or non-profit organizations or patient organizations, academics, and so on. So we expect these organizations to request the full reimbursement of their costs. Your proposal total eligible cost can also be incurred by entities that are not requesting funding, but that are contributing in kind and or cash to the project. So those entities are private members and contributing partners, and so their costs are not reimbursed. And then there is also a third type of participant that can incur eligible cost in your proposal, and those are the hybrid participant. We call them like this because they can both contribute in kind and or cash to the project, but also request funding if they are eligible for receiving funding, of course. And so those entities are also private members and contributing partners. And besides the total eligible costs of a proposal, you can also have for your proposal IKA, which means in-kind contribution to additional activities. Those contributions are not project eligible costs. That's why they are put aside, and they can be contributed by private members only. And together, those entities that are private members and contributing partners, collectively, they need to bring at least 45% of contribution. So together with the ICOP, the financial contribution that they bring, and the IKA, if any, so at least 45% contribution to the proposal's total eligible cost plus IKA. But I'll come to this specific threshold later on. So first of all, who are the private members of IHI? So those are the 4 industry trade associations that you can see here. So you have FPIA, which also includes Vaccines Europe subgroup. You have also MedTech Europe, Bio, and COSIR. And when we talk about private members, we also refer to the constituent entities, which are basically the members of those associations, and also to the affiliated entities that are basically the entities that have a financial or a legal link with those associations or with the members of those associations. The contributing partners, who are there? So it can be actually any legal entity that is interested in supporting the IHI GU's objectives in its specific areas of research, but without becoming a full member. To become a contributing partner, you need to apply by submitting a letter to the IHI governing board before the call deadline. And in the letter, the contributing partner needs to detail a bit the scope of its commitment to the proposal and to the GU objectives. The contribution also of the contributing partner needs to fulfill the cost eligibility criteria that are specified in Article 6 of the Model Grant Agreement. That's a condition for the contribution to be considered valid. And then eventually the contributing partner needs to be approved by the IHI governing board. You can see here a list of some examples of contributing partners that are already involved in the first IHI call. Just to give you an idea, for instance, AB Science, Icometrics, Combinostics, and so on. So if you need more information on contributing partners and on how to become a contributing partner, how to apply, and so on, you can go on our website. There is this direct link here on the page. So as I said, private members and contributing partners, they can contribute different types of contributions: ICOP, financial contribution, and IKA. The 3 types of contributions can be contributed by private members, and only 2 types of contribution can be contributed by contributing partners. So contributing partners, they cannot contribute IKA, so that's the difference. And also entities that are not private members or not contributing partners, they cannot contribute any of those types of contribution. And therefore, they cannot contribute to the 45% threshold. Before going through these different types of contribution, I would like to give you an overview of all the different budget items that are composing a proposal's budget. So you can see here all the list of the items, and basically you can split them into 3 categories. the estimated eligible costs, the estimated EU contribution and other sources of financing, and then the different types of contributions that can be brought by private members and contributing partners. The first two parts, they will be reflected in the budget table in the part A of your proposal based on what you have encoded in the ECIT tool. But it's not the case for the last part of this budget table because ICOP, IKA, non-EU ICOP, and financial contribution, they will not be reflected in the part A of your proposal. So they will need to be captured in an annex, a separate annex that is a compulsory annex to be submitted with your proposal. And that's why we have two compulsory steps for a proposal's budget. You not only need to encode your budget in the ECIT tool, you also need to, as I said, to fill in this annex on the budget. So I'll now going to explain you the different types of contributions that can be brought by private members and contributing partners, starting with ICOP. ICOP, which means in-kind contribution to operational activities. So as I said, it's only for entities that are private members or contributing partners, and it consists of the eligible costs that these entities will incur to implement project tasks. Those project tasks needs to be identified in the description of the action of your proposal. And so those, the costs can be of any type, like personnel costs, subcontracting costs, and so on. And the different companies that are providing ICOP, they are actually subject to the exact same rights and obligations as any other beneficiary that is signing the grant agreement. For instance, they have the same cost eligibility criteria that they have to respect. They have also the same cost calculation method that they have to follow, the same rules for the reporting, the same deadlines for the reporting. They need to use the same tool, and so on. ICOP, the exact formula of ICOP is actually the total eligible cost minus the requested EU funding, if any. So in this example, for instance, you have a case of a hybrid participant. And so the total eligible costs are 15 million. And since the entity is requesting 5 million euro, the ICOP will be equal to 10 billion. Sorry, but the formula will be actually calculated automatically in the annex on budget. It will be automatically calculated based on what you have encoded as eligible cost and as requested EU funding. ICOP also includes both EU ICOP and non-EU ICOP. And just for your information, whenever you have non-EU ICOP, it's important to make sure that it is also already included in the total ICOP. But what does it mean, EU ICOP, non-EU ICOP? So EU ICOP, it's when the costs are incurred in the EU or in one of the associated countries to Horizon Europe. While non-EU ICOP, it's when the costs are incurred in a third country outside the EU or outside one of these associated countries to Horizon Europe. And you have here the list of the different third countries that are associated to Horizon Europe. There are currently 18 associated countries, and for two countries, the agreement is still ongoing, so there's still no decision for Canada and Morocco. So to give you an example, the ICOP that will be incurred in the US, for instance, or in Switzerland, it will be considered as non-EU ICOP, while the ICOP incurred in the UK, for instance, will be considered as EU ICOP since the 1st of January 2024, UK became an associated country to Horizon Europe. So what's the criteria to identify whether ICOP is EU or non-EU? It's actually where the underlying activities are carried out. So it does not take into account where the company is established. The criteria is really where the activity is carried out. So for instance, if a company is based in the US, but the activities are carried out in Germany, the cost will be considered as EU ICOP. And the other way around, if a company is based in Germany, but has activities for the project carried out in the US, then it will be considered as non-EU ICOP. There is a maximum limit of non-EU ICOP. At program level, it is 20% of the total ICOP brought by private members and contributing partners, so for all projects together. And the limit at project level for Call 7 is set also at 20% non-EU ICOP. The annex on budget will actually calculate automatically that threshold, so you will have an idea directly if you are under or above the 20% limit. In case you are above, the annex will give you a message basically saying that in case the proposal is selected at grant preparation stage, then you will need to reduce the non-EU down to a maximum of 20%, making sure also that the minimum of 45% contribution is still maintained. So the second type of contribution that can be brought by private members and contributing partners are the financial contributions. So that's basically the cash paid by a private member or contributing partner to a beneficiary of the proposal in order to support a part or the totality of its project's eligible costs. It counts for the 45% threshold only if the recipient of that financial contribution is eligible for receiving funding. That's important. And in case you have financial contributions in your proposal, they need to be explained in the part B of your proposal. So it needs to be specified basically who is paying that financial contribution, what will be the amount, who will receive it, and for doing what tasks, what project tasks, basically. And then the third type of contribution that can be brought by private members only, in this case, it is IKA, which stands for in-kind contribution to additional activities. So what can be an additional activity? You need to fulfill different conditions. First of all, the activity needs to contribute towards the achievement of the objectives of the IHI project, or towards the dissemination, the sustainability, or the exploitation of the IHI project results. Secondly, it cannot be funded by the IHI or any other union funding program. Thirdly, it needs to be carried out in the union or in one of the associated countries with Horizon Europe. It also needs to be described in the annex on IKA of the proposal. And it cannot be project tasks, because otherwise it should be considered as ICOP. So there is a limit of 40% IKA at program level, and at project level there is no particular limit, but again the tool, the annex on budget will calculate the threshold for you, and in case you are above the 40%, of IKA, then the annex will generate a message saying that it should be, it is recommended that the private member informs the association office, so that the overall threshold of 40% of IKA can be monitored properly at overall program level by industry. So what are the differences between the IKA in your project and the ICOP in your project? Since those two types of contributions are in kind, there may be some confusions. So let's try to clarify this. So ICOP are eligible costs in implementing project tasks, so project activities, as they are described in the description of the action of your proposal, while IKA are costs for additional activities that are not project tasks and therefore not ICOP. And it's really up to the consortium to identify what is considered ICOP and what is considered as IKA for their respective projects and depending on the project objectives. Also, ICOP are eligible costs, so they can be reimbursed by IHI, of course, if the private member or is eligible for funding. There is a mistake on my slide actually, because contributing partner cannot contribute IKAA. I will remove this. While sorry, it's just for ICOP. Sorry, I start again. So ICOP are eligible costs and therefore they can be reimbursed by IHI in case the entity is eligible for receiving funding, while IKA are non-eligible costs and therefore they cannot be reimbursed by IHI. Another difference is regarding the Horizon Europe's rule. So ICOP is subject to the exact same rules as the other beneficiaries that are signing the grant agreement in terms of reporting and cost eligibility criteria, as I said already before, while IKAA can be valued following the usual cost accounting practices of the company and is actually not subject to the Horizon Europe's eligibility rules. And for IKA, there are also different reporting deadlines, different reporting tool. So there are quite many differences. And another difference is regarding the time frame. So for ICOP, the cost must be incurred during the project implementation, so between the start date and the end date of the project in order to be eligible, while for IKA, the cost can already be incurred before the project starts, so from the submission of the proposal and up to 2 years after the project has ended. So IKA has a broader time frame than ICOP. Just to give you some potential examples for IKA, imagine you have a project objective, which is to integrate diagnostic and predictive approaches to support multimodality cancer care. A potential additional activity could be before the project starts, for instance, to develop an image-guided radiation therapy device. And that device would be used for the consortium activities and as a result would contribute to achieving the project objectives. During the project implementation, you could imagine to have an additional activity to generate data from clinical trials using cancer treatment modalities, but other than those of the project, and which would be used as an independent data set. And these data would further contribute to verify the usability of the integrated approach developed by the project and would therefore help its fine-tuning. But the project activities would not depend on these specific data sets. And after project end, a potential additional activity could be to develop a decision-making software tool to enable easier communication in the cancer care continuum and between stakeholders. And so this tool, yes, would contribute to the deployment and the exploitation of the project output. So that's how it would fit the IKA definition. So whenever you plan an additional activity, it's important to always double check the different conditions that I mentioned on the slide before, on slide 18, and make sure they are fulfilled. If it is the case, normally it should be fine to consider that activity as an additional activity and therefore as IKA. Potential wrong examples or what could not be considered as IKA, it's for instance the preparation activities for the consortium agreement, since it is a mandatory prerequisite for all projects and before the project starts. So this cannot be considered as additional activity. Activities that are essential to reach the project objectives, it's also not accepted as IKA, it must be ICOP. Or activities that are carried out outside the EU or outside one of the associated countries of Horizon Europe, it's also not fine. Or activities that are already considered ICOP or IKA in another proposal, it's also not acceptable since it would lead to some double counting. activities that are taking place before the project, the proposal, sorry, is submitted, is also not a valid additional activity, and eventually also the activities for which the private member has actually not incurred any cost during the eligibility time frame, and that would also not be acceptable. So as I said, the IKA needs to be specified in an annex, which needs to be submitted together with your proposal, in case you have IKA, of course. And that annex looks more or less like this. So it includes some information that you need to provide, like the title of the additional activity, a brief description, a complete description as well, a bit more elaborated. Also an estimation of the period when you think the activity will take place. The link to the IHI project should also be explained properly, and eventually also the estimated total value of the additional activity. And as you can see, some information will not be published and only shared with the applicant consortium or with IHI office and with the IHI governing board, while other information will be published on IHI website. What is important with this annex is to make sure that all the information is provided, that there are no empty cells, also that the information inserted is understandable by any reader, since some of the information will be published. So for instance, you need to avoid acronyms and very technical terms. It also needs to be very specific, the information that you provide in the annex, especially in the descriptions of the activities, specific, clear, and concise. So now that I've, you know what are ICOP financial contribution and IKA, I can come to this important threshold, which is the, the 45% contribution that needs to be brought by private members and contributing partners together collectively for a proposal. The formula is the one you can see on the screen. It is calculated automatically in the annex on budget, so that's quite convenient. Whenever you insert the budget in the annex, you can directly verify if your proposal reaches the minimum of 45% contribution. And it's really key, because if that threshold is not reached, then the proposal will not be evaluated. And since it's a very important criteria, the coordinator of the proposal will actually have to submit a declaration, which is an annex to the proposal, to confirm that the 45% contribution will actually be provided. This 45%, it can be reached with only one or two types of contribution. So for instance, only with ICOP. As I said, it's only for private member and contributing partner, not for other entities. Other entities, really, they cannot contribute ICOP or other types of contribution in order to contribute to that 45% threshold. The 45% threshold can also be reached with only private members, or only with contributing partners, or with both types. And that threshold must also be maintained during the whole project implementation. So as a prudent approach, IHI actually recommends proposals to aim for 50% contribution from private members and or contributing partners, because you never know what can happen during the project implementation. You may have an activity that cannot be carried out, and that makes your ICOP drop dramatically, or you may have a private member leaving the consortium. So in order to mitigate that risk and to avoid that you go under the 45%, IHI really recommends you to aim for 50% contribution. I'll go now to the different cost items, the different types of eligible costs in blue. So those columns, they need to be filled in by all applicants, so also by companies providing ICOP. And you can see the different types of cost categories here, personnel, subcontracting, travel, equipment, and so on. I will go through them one by one rapidly. What is important here is that all those costs fulfill the eligibility criteria, which are specified in the Article 6 of the Model Grant Agreement. Namely that the cost needs to be actual, real, so not estimated, and they should not include any profit margin. They should be recorded in the account of the entity that is carrying out the activities. They should be foreseen in the budget of the proposal. They should be necessary for the action. And important also is that the cost should be documented because they will be audited at some point, and the auditor needs to be able to reconcile the figures between what is reported and what appears in the accounts of the entity. So those cost eligibility criteria, they are really key, especially because only costs that are eligible can be reimbursed or be considered as ICOP. So I invite you to have a look at this Article 6 of the Model Grant Agreement. So let's start with the first type of cost, the personal costs. You can have here in this category cost for employees, or cost for a natural person that has a direct contract with your entity, but not an employment contract, for instance, in-house consultant. You can also have cost for seconded personnel, which is when you have a person employed and paid by a third party external to the consortium, but then put at the disposal of a beneficiary for against some payment or for free. And in this cost category, you can also have costs for SME owners or natural persons that are not paying themselves a salary. So if I take the most common case, the cost of the employees, you have two options. Either you use actual costs following the Horizon Europe calculation method, which is the one you can see on the screen. So basically the personal cost for one person, you can obtain it by multiplying the daily rate for that person, multiplied by the days that have been worked on the action, with a maximum of 215 days per year for full-time equivalent. And the daily rate for the person, you can get it by dividing the actual annual personal costs for the person, and you divide that the actual annual personal cost, by 215 days for full-time equivalent. In the annual personal cost, you can include there any component that are legally obligatory by national law or in the employment contract, the taxes, the social security, even the Christmas pay if it is legally obligatory. And another option for the cost of your employees is to use average personal cost, which is a unit cost. And this you can use it only if it is according to your usual cost accounting practices. So I really invite you to have a look at the annotated model grant agreement because it contains several examples on the different types of calculations for personal costs. And so it's very useful. I invite you to have a look at this document. Subcontracting cost, that's when a beneficiary needs to contract a third party to work on some project tasks on its behalf. In this case, you always have a contractual link between the beneficiary and the subcontractor, and which is based on business conditions, since it always includes a profit margin for the subcontractor. The beneficiary needs to make sure that he follows its usual internal practice for selecting the subcontractor and ensure a best value for money or lowest price if it's appropriate, as well as transparency and no conflict of interest. And an important note, it is not allowed to have subcontracting between beneficiaries. Purchase costs. In this cost category, you can have cost for travel or accommodation or equipment. For the equipment, most of the time, you will need to charge only the depreciation cost, which will be only for the part of the equipment that has been used for the project. And you'll need to also follow the usual practice of your entity in terms of depreciation. In this purchase cost category, you may also have cost for other types of goods, works, or services in case it is necessary to implement the action. Normally, it is quite limited in scope because it does not concern project tasks. But if it is to implement project tasks, then it will be more considered as a subcontracting cost. Internally invoiced goods and services, those are costs for goods or services that the beneficiary itself will provide or produce and to be directly used for the action, like some self-produced consumables or some specific devices or facilities. And this needs to be calculated as unit cost and following the beneficiary's usual cost accounting practices. And also, you need to make sure that the general eligibility conditions are fulfilled. Regarding the indirect cost, it is a fixed flat rate, which is calculated as 25% of the direct costs, excluding the subcontracting cost and excluding the internally invoiced goods and services. It is calculated automatically and for all beneficiaries, so also for companies that are providing ICOP. And so it's important, since it is calculated automatically based on the direct cost, it is important that you do not include any indirect cost in the other cost categories to avoid any double counting. For instance, if an entity has average personnel costs, and its usual practice is to include indirect cost in the FTE rates, the full-time equivalent rates, then in this case, the rate will need to be recalculated to make sure that the indirect costs are excluded from the FTE rate. And now I come to the last part of the different budget items, the estimated EU contribution and other sources of financing in green. So this third part is more to reply on the question, how are the different applicants' costs covered? So the cost that can be reimbursed by IHI in case some EU contribution is requested. They can also be covered with the own resources of the participant, or they can also be covered by a financial contribution received other than from IHI. For instance, a financial contribution received from a private member or a contributing partner. And so you have several scenarios possible. Either you have a combination of those different sources of financing, or only one source of financing, or it can also be none of those financing sources. The funding rate is always 100%, and it is automatic, and it actually gives the wrong impression that all participants, they will get all their costs reimbursed, but it's actually not really the case, because the private members and the contributing partners, they should bring at least 45% to the project. And also in some case, you may have participants that are not eligible for receiving funding, like entities in the US, for instance. So just to give you an overview, yeah, so as a conclusion, indeed, not all participants can get all their costs reimbursed. And here an example of a simplified budget. You have the public partners that are requesting the full reimbursement of their cost, 15 million. The private members and or contributing partners, they request 0 EU contribution because they want all their eligible costs to be considered as in kind. And then you have a hybrid participant, which is optional in your proposal, who are requesting 5 million of EU contribution and also contribute 5 million as in kind. And you see that so not all participants receive a reimbursement of their cost, and we still reach this 50-50 matching between public and private funds. So the participants that are eligible for funding, as I said, so we call them the public partners, so to say, because they're like SMEs, universities, hospitals. So those entities that are eligible for receiving funding, we expect them to request the full reimbursement of their costs. The hybrid participant, they can also request some funding, but then they need to keep in mind that the 45% contributions should be reached. And they should also keep in mind that whenever they request funding, then it will decrease the funding available for the other participants. And the participants that are not eligible for funding, then they should, of course, request the EU contribution. So who gets what as part of funding? That's really something that needs to be discussed and agreed among the different applicants. So the cost, they can also be covered by financial contribution. So that's the amount expected to be received as cash for the project, but other than the cash received already from IHI. It includes, for instance, a financial contribution that you may receive from a private member or from a contributing partner or from a regional fund. And the beneficiaries that are receiving a financial contribution, they must ensure that they will not request any EU contribution for the costs that are already covered by a financial contribution, to make sure that no double funding, because no double funding is allowed, obviously. So the cost, they can also be covered with the own resources of an entity. So that's when the costs are not entirely covered with EU contribution and or by financial contribution received. And so it consists of the own resources of the participant that participant plans to use for the implementation of the project. And it must always be zero for private member and contributing partners, because their own resources is actually their ICOP. Here you have a simple example of the different sources of financing. So for instance, for public partners, if they have 20 million total eligible costs, they may request 15 million as EU contribution. They could have 5 million covered by a financial contribution received, and then they would cover themselves with their own resources 1 million. And so you can see that in the end, all the costs are covered in a way, and there is no profit also, and that's important to be checked. So you need to make sure that the total eligible costs, they are always equal to the requested EU contribution plus the financial contribution plus the own resources. But this is actually calculated automatically in the annex on budget. Again, so you will not need to make that check yourself. And speaking about the annex on budget, I will give you a word on that as well. So first of all, this is the proposal's budget, how it looks in the ECIT tool. So it's one standard budget table for all EU grants, and therefore it actually does not contain the GU specific budget items like ICOP, FC paid, and IKA. So those cost items, budget items are missing. Which is obviously an issue for us, because then the budget in the proposal part A is clearly incomplete, and also we cannot calculate the 45% threshold. So we need to find a solution, and that's why we developed that annex on budget. which does include those cost categories. So EU ICOP, non-EU ICOP, FCPAID, and IKAA are therefore reflected in that annex on budget. So that annex is mandatory. It needs to be submitted as part of the proposal. And you will see it's quite useful to have that annex in the end because it calculates automatically some threshold. It also does not allow some values to be entered in some cells when it should not be applicable. Also, some figures become red when something looks wrong. And there are also some warning messages to avoid you to encode any wrong data. So it's not too bad in the end, but the result is that you have two compulsory steps to follow for providing your proposal budget. First, you need to fill in the annex on the budget, and then when everything is correct in the annex on budget, you can insert your budget in the ECIT tool. But of course, you need to ensure consistency since some values are both in the annex and the ECIT tool. So it's really key to make sure that the data are the same. In case of discrepancies between those values, then the ones encoded in the ECIT tool will prevail. But make sure, please, that there are no inconsistencies. The annex on budget, so it's actually an Excel table which contains 4 tabs. The first tab contains instructions that I recommend you to read because it explains clearly how to use that annex, and it also reminds some of the key elements that you need to pay attention for your proposal's budget. And then there is a simplified budget tab, which is optional, and a detailed budget tab, which is compulsory, which is the one that needs to be filled in absolutely. And then the last tab is to check the results of the different thresholds, and basically based on what you have encoded in the detailed budget tab, you will be able to see whether you have reached the 45% or not, thanks to that last check result tab. The simplified budget tab, which is optional, as I said, looks like this. So it contains only 3 rows and 1 row per type of participant, because it's really simplified version of the budget to allow you to make different budget scenarios, for playing a bit with the figures and to quickly see if your proposal reach or not the 45%. Because you can see on the same page, you have under the table where you encode the figures, you have the table with the check results. So we can check this more in detail now. What are the different results you can check? The most important one is, of course, the 45% eligibility criteria. So in case you don't reach the 45%, it becomes red, and it's clearly a blocking issue. While if you reach 45% and up to 49, it will become orange, which is fine, which is good. Your proposal reaches the 45%, so it's accepted. But it becomes even green, which is even better if it reaches a 50% contribution, which is, as I said earlier, the recommended approach of IHI. Other elements that you can check in that check results tab are the non-EU ICOP threshold, the balance also between the financial contribution paid and received, and the IKA threshold. And so in case, for instance, you exceed 20% non-EU ICOP, it will become red, but it's not a blocking issue. It's just to attract your attention, basically. Then the detailed budget tab, which is the one that is compulsory in the annex. It includes all the budget items, and there is 1 row for each participant. So as you can see, it's a bit more complete. And so in blue, you have the cells that are editable. In yellow, the ones that are automatically calculated. And in gray are the ones that are not applicable. So it's important to always start with the type of participant. So you need first to select whether the entity is a private member or a contributing partner or a beneficiary that is requesting funding only and therefore not contributing any ICOP, or an associated partner also. So when you have first inserted the participant type, then only after that you can start encoding the total eligible cost, and then basically you need to go from left to right whenever you fill in the information in this annex. And then once it is filled in, you can check the results of the data you have encoded, and you need to correct the detailed budget tab if it is necessary, in case, for instance, you don't reach the 45% threshold. So now I will give you a practical example on how to build your proposal budget. So you have two scenarios. Either the public partners are leading and seeking matching from the private member and or contributing partners. That's one scenario. Or a second scenario is when the industry is leading and then seeking collaboration with the public partners. So in the first scenario, when the public partners are leading, first, those public partners, they need to calculate the EU contribution that they need. And then in the second step, they need to seek the contribution from the private member and or contributing partners in order to match the EU contribution. And then as a third step, they need to bring those private member and contributing partners in their budget, so that basically all the participants are put together in the budget. And based on that, you can fill in the annex, the simplified budget. As I said, it's optional. You can also test different budget scenarios if needed. And what is compulsory is the detailed budget tab in the annex. You need to, of course, ensure that you reach the 45%. And if necessary, you need to adapt your budget. And when the budget is totally correct in the annex on budget, then you can encode your budget in the EC IT tool, and ensure, as I said also earlier, that figures are consistent between the values encoded in the annex and the values encoded in the EC IT tool. So that's for scenario one. And scenario two is very similar, only the first steps are a bit different. So in the scenario where the industry is leading, then it's the private member and the contributing partner who needs to calculate the contribution to try to match the EU contribution available for the consortium. And they need to, because they need to reach at least 40%. And then as a second step, they need to calculate the remaining funds that are available for the public partners. And as a third step, it is the same as for the scenario one. Basically, you need to put all the different participants together into the budget. But I will give you a concrete example to make it easier. So let's take scenario two, when the industry is leading. So you can see that the EU fund available for, imagine a target topic is 10 million, and then the matching, it needs to be matched by private member and contributing partners, if any, for the same amount. So as again, this is the 50% prudent approach, but for a proposal, 45% of contribution is the formal minimum which is accepted. But so based on those information, what are the different steps? First, the private members and or contributing partners need to calculate the contribution they can bring. So in terms of ICOP, financial contribution, and IKA, if any. because as I said, you can also have just a proposal with ICOP or only with a combination of ICOP and financial contribution, for instance. You don't need to have necessarily the 3 types of contribution. But so together, when you sum up the different types of contribution, it needs to equal the total amount of EU funding available. And you see that it is the case in this example. Since they reached in total 10 million in total with ICOP, IK, and FC paid. Then, as a second step, they need to calculate the remaining funding available for the beneficiaries that are requesting funding only. Since there were some hybrid participants, they were requesting funding, and you can see here that they were actually requesting 4 million. So they contribute 10, they request 4, meaning that there is a remaining funding available for the public partners of 6 million. And so as a third step, they need to bring those beneficiaries requesting funding only, but making sure that the requested EU contribution remains within the limit available of the 6 million euro. And in case the limit is exceeded, then a compromise needs to be found between the public partners and the hybrid participants. Here you can see that the public partners are requesting 6 million euro as EU contributions. So they do not exceed the limits. Because their costs are also covered with financial contribution received for about 2 million. And there is also the large company Y, which is bringing 1.5 million of own contribution. And that's how the public partners' eligible costs are covered. And this allows to have a matching between the total contribution brought by industry with the requested EU funding. So the first step is to then fill in the simplified budget tab of the annex as an option, but imagine you do it, this is what it would give in this example. You see that there are not many figures to enter, and you could directly see the result of on the 45%, you can see that you do reach the 45%, you even reach 46%. So if you want, you can still play with the tool, with the annex, and try to test different budget scenarios in that simplified budget tab to potentially increase the contribution and reach 50%. You have different possibilities. Either you decrease the part of the requested EU contribution requested by hybrid participants, then it will automatically increase the ICOP. If you also increase the cost of the private member and or contributing partners, it will also automatically increase the ICOP. If you increase the IKA or if you increase the FC paid, it will also increase, positively impact the 45% threshold. You can also make a combination of all those elements and play a bit with the tool, as I said. So here, I decreased the EU contribution requested by private members. So it automatically increased the ICOP in the annex, and it directly increased the total industry contribution. And you can see that it has an impact on the threshold. It reaches even 51% of contribution, which is good. So the step 6 is to then fill in the detailed budget tab, which is the compulsory tab in the annex, containing all the information of the different budget items and for all participants. Check again the check result tab to make sure that everything looks fine, adapt if it is necessary. And when everything is correct in the annex, then you can encode your budget in the ECIT tool and ensure, of course, that figures are consistent between the values in this annex and the values we encode in the ECIT tool. And when you are done, when you have done all this, you are done with your proposal budget. Here I put you a list of documents that are, I think, really relevant when preparing your proposal budget. You have the model grant agreement, but also the annotated version of the model grant agreement, which is actually very useful in my view because it contains a lot of annotations and examples. The frequently asked questions for IHI calls, which may already answer some of the questions you may have. The guide for applicant, which is also a bit kind of the Bible with all the different information related to IHI calls. The IK guidelines, which is currently being revised, but you have already one version on the website. The annex on budget for call 7, and then also the guide for contributing partners. Voilà.
Thank you, Gail, for this really detailed presentation. So before we start the question session, I would like to remind you the session that you are holding now for call 6 and 7. So all the sessions that we had this week, they have been published on our IHI website, and the one from today for the financial topic will be published today. So you will be able to see the recording and to have the presentation. We also have the pitching session on the 23rd, 24th, and 25th, and you still have time to register to pitch. The deadline is today by the end of the day if you would like to pitch on any topic on call 7. So now let's start the question session. So the first question that we have is from Steve, asking how can you calculate the hour rate for universities / hospitals? They can normally use different hour rates than, for example, a company.
So for Horizon Europe, already it's not hourly rate, but it's daily rates. So that's a major difference already. And then you need to follow your, you need, sorry, to follow the formula of the Horizon Europe model grant agreement. So I presented it. I think it's like the actual annual personal cost for a person. They need to be divided by 215 days for full-time equivalent. And I also put a link to the annotated model grant agreement that contains a lot of examples, because I didn't have time to go into the details on how to calculate such a rate for the different case scenarios. But you definitely can find an answer to your question, I think, in that document.
Okay, thank you, Gail. The next one is from Avidan, asking, can academic organizations be a contributing partners by making available a laboratory platform that has incurring costs for its running / maintenance?
But so I would say that the contributing partner needs to be, it's usually not an academic organization, I would say. I'm a bit surprised by this proposal, but I would say, to make sure I don't say anything wrong, I would rather suggest to have a look at the guidance for contributing partner specifically. Because the idea is indeed that the contributing partner needs to contribute to the GU objectives and the proposal, and it needs to be approved by the governing board. So it depends also on the letter that is submitted. The contribution also needs to be eligible. So making available a laboratory platform. I don't know, yeah, if Domenico, you want to complement on this, but
If let's say if it is it's an in-kind contribution, but as Gael has already explained, this shall not be only included in the technical annex and budget, but shall be also part of the package for the application to be submitted by the contributing partner.
Okay, thank you both. The next question is from Dominique, asking, are there exemplary templates available to calculate the different contributions?
No, unfortunately, there are no templates, but there are there is the annex on budget, and there is the guide for applicant, I would say, as well, that explains what are the different types of contribution and how to calculate them. But there is no template as such, I would say, rather the guide for applicants.
Thank you. The next one is from Thomas. So he has two questions. The first one is, on which cost type will the 25% overhead be calculated? All or only FTE and goods/services? And the second question is, can there be a EU contribution for entities providing non-EU ICOP?
So the first one, the 25% indirect cost is calculated on the direct costs, except the subcontracting cost and the internally invoiced goods and services. But all the other direct costs are taken into account to calculate the 25%. And can there be a EU contribution for EU and for entity providing non-EU ICOP? Yes, I mean, if the entity providing non-EU ICOP is based in the EU or in the associated countries of Horizon Europe, or in one of the how is it called, low and medium income countries, they are eligible for receiving funding, and therefore can request funding and be a hybrid participant. As I said, non-EU ICOP is not especially, the criteria is not where the company is established, but where the activity is carried out. I hope it answers the question.
Okay, thank you, Gael. Pamela is asking, what is the EU contribution for academia and university?
Well, so we expect those entities to request the full reimbursement of their costs. So the funding rate is 100%, but depending on the different the other participants in the consortium, as I said, the funding is something to be discussed, and it's not fixed per type of participant. So this is what we could expect, but now there may be a university that is also covering some of its costs with own resources. But okay, also covered with financial contribution from a private member. But we expect these entities to get the full reimbursement of their costs, whether it is with EU contribution or with financial contribution, usually.
Perfect. Next one is from Daniel. Is asking, is it correct that an early stage startup, in brackets SME, can request reimbursement of 100% of the costs?
Yes, it is correct. Yes, absolutely. As long as the SME is based in the EU, in the associated countries, and in one of the low and middle income countries, the entity is eligible for receiving funding and can therefore request funding. And as I said, the funding rate is 100%, but then again, who gets what needs to be discussed among the different applicants of the consortium. But I can expect that an SME would receive the full reimbursement of their costs.
Okay, now we have Steve telling us that it's a little difficult to follow about the organization that will do in-kind/cash contribution. Normally, if you have 50% funding rate, every organization will contribute. Is it right that it's not possible in this call? If yes, why? And then he has another question. How can we come in contact with organizations that want to contribute together 12.5 million?
So for the second part, how can we come in contact with organizations that want to contribute together? I hope my colleague can answer, Domenico, yes?
Okay, so concerning concerning the second question, it is up to the entity to get in contact with potential contributing partners. It is a requisite of the call for proposal to provide in-kind contribution. So there will be networking events, pitching sessions, and any other. It is up to the applicant to find the best networking solution to find these entities available to contribute. Concerning the first question, the ICOP percentage is a legal requirement which is set out in the single basic cap, which is the regulation establishing the joint undertaking. So it is not a different funding rate that determines the budget of a proposal. There are different parts in a budget of a proposal. There are beneficiary requesting funding. There are also entities providing in-kind contribution, and it might be a combination of that, which is called with the status of hybrid participant contributing partner or beneficiary receiving funding. So it is not correct that a different funding rate can overcome these legal requirements.
Thank you, Domenico. And now we have Emmanuel, who would like to know if an academic entity can be a contributing partner.
This is the same question as we have had already before. I don't know if Desmond could reply on this one. Can an academic be a contributing partner?
Yeah, sure. So I think, Gail has referred to this answer a bit earlier on. I think the key point is that if you're contemplating being a contributing partner, there's two aspects. One, the only way to become a contributing partner is to make an application to the IHI governing board. And we have a dedicated legal officer here, Carolina, who does a lot of work on this, who has prepared a guide, which is available on the IHI website, template letters, etc. But for the academic entity to do this, the academic entity has to be has to have a capacity to bring either in-kind or a financial contribution for the actual project. And then between that and the question as to whether they're actually making a contribution to IHI's wider goals, it is something that we've seen in the past. As Gail mentioned in the first answer a few minutes ago, it's not very common, but it does happen. So I think the best answer we can give based on the information, it's quite a short question. We would say, take a look at the IHI website, check the section on contributing partners, have a look at our guide, take a look at the template letters, quantify the potential financial contribution and in-kind that you have available. And then if there's any further questions, you can actually reach out to Carolina and the IHI legal team here, and we can answer any further questions and guide you through the process.
Thank you, Desmond, for helping us for this question. The next one is from Michael. Can foundations such as Wellcome Trust, Sanger Center, Gates Foundation, Leduc, etc., be considered for ICOP? And can countries like Taiwan, Korea, and China be included for ICOP?
Yes, well, those entities, they can apply to become contributing partner, and therefore they can contribute to ICOP. And if ICOP is included in countries like Taiwan, Korea, and China, then it would be considered as non-EU ICOP, but it can be ICOP. Yeah.
Thank you. We have Irakli asking if a private SME is a contributing partner and plans to contribute ICOP. Does this mean that it must bear all the costs to cover ICOP without using the EU share of funds? Yeah, do you want me to repeat the question?
Yeah, sorry, I need to read.
No,
And
it's
at the
okay.
same time, I want to look at the camera, so it's a bit difficult to and to listen to you at the same time. So if a private SME is a contributing partner and plans to contribute ICOP, does it mean that it must be all the costs to cover? Okay, so the ICOP are the eligible costs that are incurred by the contributing partner to implement the project tasks. If no funding is requested, then those total costs will be considered as ICOP. But the entities, if it is eligible for receiving funding, could request funding as well, and therefore only the part that is not reimbursed would be considered as ICOP.
Thank you, Gail. And now we have Gabriela, who would like to know if there is a threshold for financial contributions.
No, no threshold.
Clear. Sylvia is writing us, what happens if a private member / contributing partners cannot provide the planned ICOP during the project?
Well, then in that case, it needs to be dealt with by the consortium. Mitigation measures need to be found in order to make sure that the 45% is still reached, to maintain the 45% eligibility threshold. So, for instance, it can be compensated by financial contribution or by IKAA, or another private member can take more ICOP if another one leaves, for instance. So yeah, this needs to be dealt by the consortium as a whole and by the different private members and contributing partners in the project, because together they need to bring a certain amount of contribution which reaches the 45% contribution. And if it's not reached, it is an issue indeed. Then normally the project is considered as not eligible anymore. So a solution needs to be found.
Thank you. Now, Dominique writes, is it possible for a parent company to have costs in a subsidiary, and declare these as ICOP?
For this one, I would need to have more details, because having costs between, I mean, in companies of the same group declares as ICOP.
Yeah, I don't know if Dominique is still online with us and if he can send us more details for us to be able to reply his question. Meanwhile, we will address the next one. So it comes from Martina. In the call text, is it mentioned that we should apply the 3A condition, and this means that we need to keep communication activities 4 years after the project end? Is it possible to include costs and efforts to cover these? How should we do it?
So on 3A, I think it's important to just consider what's going to be happening after the 4 years. So as Gail has detailed in her actual slides, when we talk about the project and the associated costs, all the costs for them to be eligible have to be incurred during the lifetime of the project. And this is an unbreakable rule. So the obligations that exist, the downstream obligations after the end of the project, they really refer more to a projection of, for instance, the values of the products that are going to be developed during the actual project and are subject to 4A. So we cannot, by definition, allow projects to allocate costs that would be incurred after the end of the project. There's one exception here, which is obviously in relation to EKA, which Gail mentioned as well, which can be allocated for up to 2 years afterwards, but that probably wouldn't be coming from the beneficiaries who are receiving funding. So the key point here is when we talk about these 4-year obligations, we regard it more as a reporting system more than anything else, where basically it's projecting what's going to happen to the projects and how they're going to settle into, you know, the ecosystem after the end of the project, if indeed these projects are actually introduced. So we would view any costs incurred in relation to this to be very, very light. But just to be completely sure, and Gail's mentioned this emphatically a couple of times, and I'll just repeat, even in relation to 3A, for your costs to be considered eligible, they must be incurred during the lifetime of the actual project.
Thank you, Desmond. The next one is from Steve. He has.
Reply to the previous one.
Yeah, sure.
Dominique.
Yeah, sure.
So we have to consider, first of all, which is the role in the project of the company, if it is private members or affiliate or constituent entities of private members, and the entity, the subsidiary, is legally independent, as legal personality, can be included in the grant agreement, and the ICOP can be reported as such. On the other way around, if it is a subsidiary of a contributing partner and does not have legal personality, it is possible that the contributing partner itself reports the cost. On the other way around, if the entity is independent and it's an affiliated entity with a link to a contributing partner, it is advisable that also this entity becomes a contributing partner in the project.
Thank you, Domenico. So now we're moving with question from Steve, several questions. So the first one, can everybody be a private member? So everybody can contribute in kind / cash to the project. And the second one, how can public partners contribute to the project?
So no, not everyone can be a private member. A private member is only if you are a member of one of the associations that I was referring to, like FPIA, MedTech, COSIR, and Europa Bio, or if you are an affiliated entity of these entities. So meaning if you have a legal or financial link with those members or with the associations directly. So those are the conditions to become a private member. So not everyone can contribute in kind and or cash to the project. And how can public partners contribute to the project?
Contributing partner.
No, public partners. So how can public partners contribute to the project? In terms of ICOP, is the question related to ICOP? I mean, they cannot, because they are not private members. Unless they apply to become a contributing partner, then they can contribute ICOP. Yeah, but not IKA.
Thank you. The next one is from Martina. For open access publication, is it possible to allocate budget to cover these costs? What are the eligibility conditions? Domenico, if you can step on this
okay.
one. Thank you.
So the cost must be eligible, so must be included, described in the text of the proposal or the grant agreement, and must be incurred during the lifetime of the project. It is possible that it becomes eligible.
Thank you. Maria is writing, as SMEs seem to be considered public partners in this call, how do you distinguish between private partners and public partners? And are all SMEs considered public partners independent of size?
No, actually, it's true. Maybe the slides were misleading on that point. You can also have an SME that is a private member, or even an SME that wants to apply as a contributing partner. So, but it's just that most of the time we expect SMEs to request funding and therefore to be more considered as public partners. I don't know if my colleagues want to complement.
Maybe I might just augment that answer slightly, because we had a similar question in the rules and procedures webinar yesterday. So what we're basically saying is that SMEs are in an interesting position when it comes to IHI calls, because we could have an SME who is what we call a constituent or affiliated entity of one of the private members. So the example we used was we could have an SME, for example, in Ireland, who is a member of the Irish National Association, and that association is then attached to one of the private members that Gail described, FP, COSIR, or whatever. So we would consider that SME then to be counted among, you know, the private members or their associates. But also we could have an SME that is completely unaligned with any of the trade associations. But the key point for here, because it's a single stage call, is that regardless of whether they're actually associated or not, or regardless of their actual size, they are eligible to receive funding under this call. And I think that's the key point. So if you're an SME, A, you're very, very welcome to participate. And B, funding is, there are funding options there for you.
Thank you, Desmond. And now we have Paulo, who would like to know if his interpretation is correct. So he's saying, if 45% of the total requested budget for the project must be covered by in-kind contribution from a member of the consortia that are part of the IHI network, is it correct to assume that such costs should be covered by, for example, Philips from MedTech, if such member should be part of the project consortium? So in this case, Philips would be a project partner. Who could you help, Paulo?
Well, what I would like to say here is that Philips, being a member of MedTech, is a private member, and they can either contribute in kind, cash or IKAA to a project. They can also request funding. And so if they request the full funding, then they will be considered as a normal public participant, partner.
I think maybe just to clarify one thing in the question, where Paulo is basically saying that, you know, the in-kind contributions from a member of the consortia. So I think what we want to emphasize here is that meeting the 45% requirement, and Gail mentioned this in a previous slide, it's the responsibility of the entire consortium. So what can happen here is that 45% in kind can be contributed from either the contributing partners that we've been talking about, or potentially private members or their constituent or affiliated entities. So indeed, you can basically have Philips, you know, or you know, any other private member or their consortium affiliated entity in the project who will contribute in kind. This is perfect. But it shouldn't be placed, it shouldn't maybe not be the responsibility of just one participant. I think the idea is that we need to ensure that the consortium as a whole are aware of this obligation, because it's a very, very strict eligibility criteria, as Gail said, before the project even starts. We need to make sure it's actually there. So this should be thought about by all the participants in the actual applicant consortium.
Thank you, Desmond. And the last question is from Emmanuel. Can you please tell us a bit more about the condition to be a coordinator? Can an academic legal entity be a coordinator?
Yes, an academic entity can be a coordinator, and there are no formal requirements for being a coordinator and for their legal status. This just needs to be eligible for funding.
Thank you, Domenico. So we don't see any more questions in, and I think we can close the session here. I would like to thank Gael, Domenico, and also Desmond Gael for the presentation, and the others replying the question. Thank you for the question that you sent, and thank you all for your interest in this session. And I just wish you good luck for your proposal. Thank you very much. Bye.